By 9:30 a.m., your trade is either decided or improvised. The difference between consistent traders and gamblers is what they do between 7 and 9 in the morning. Today, the 5-step pre-market routine of a disciplined swing trader: gap scan, sector strength check, watch list review, key level marking, and the no trade filter that saves you from yourself when the market is wrong for your setup. Here are the 5 steps in order. 1. Scan the overnight gaps to see what's moved and why. 2. Check sector leadership, which ETFs are showing strength versus SPY. 3. Review your watch list and discard anything whose thesis broke overnight. Mark the key levels on each remaining chart, the prices that will trigger or invalidate your trade. 5. Apply the no trade filter. If the broad market is wrong for your setup, you don't force it. 5 steps, same order, every day. Step 1. Open your scanner or broker watch list and look at the overnight gappers, stocks moving more than 2% from yesterday's close in either direction. Earnings reactions, news catalysts, sympathy moves. Most won't matter to you. But a gap up on a watch list stock changes your entry. A gap down on a stock your long changes your stop. 3 minutes max. The point is to see the night's news in price form, not to chase anything. Here's the principle that ties steps 2 and 3 together. The same chart pattern has a dramatically higher success rate in a leading sector than a lagging one. A perfect setup in a weak sector underperforms a B-grade setup in a strong one. That's why the sec check comes before the watchlist review. Leaders narrow the pool, then your setups filter further. Money flows where sectors lead. Your job is to follow it, not predict it. Step 4, and this is the one that separates amateurs from pros. On every watchlist chart, mark 3 prices before the open, where you'll enter, where you'll stop out, and where you'll take profit. Write them down. Once the market opens, your job is to execute the plan you made cold, not to make new decisions warm. Most bad trades happen because the trader is deciding in real time what they should have decided in advance. Step 5 is the hardest discipline of all. Some mornings, the broad market is just wrong for your setup. The volatility is too high, the trend is fighting you, the catalyst is unclear. On those days, the right trade is no trade. Sitting out is not weakness, it's the most disciplined act in trading. The number of bad trades you skip is more valuable than the number of good trades you take. If steps 1 through 4 don't all line up, the answer is no, and tomorrow is another morning. So 5 steps, 7 a.m. to 9:30. Gaps, sector strength, watch list, levels, no trade filter. Same order every day. Decide cold, execute warm, and accept that some mornings you do all 5 steps and find nothing. That's a successful morning. Subscribe for the full method and trade your own plan. Education, not financial advice.